To go. All right, guys, welcome to another Monks Academy episode. And today we'll be discussing the latest proposal for Omm put forward by Scott. The proposal also on adding Omm and balance. And lastly, if there's time, I want to get some thoughts on the BNUSD listing. I urge you to go through these proposals if you have not done so already by going to the Omm Governance Forum website, which is forum.omm.finance. And like I always, if you have any questions, do click the raise the hand icon. I'll get you guys on as soon as I can. So to discuss all this, I have with me on the episode today Scott and DK. Thank you guys once again for lending your time for the Monks Academy. Always a pleasure having you guys both.
Happy to be here.
So I really want to start by discussing your proposal, Scott. So this proposal is about adjusting the Omm distribution rewards for lending and borrowing. So you're proposing a uniform application of the distribution across the different asset markets of 25% going to the lenders and 75% of Omm rewards allocated to the markets going to the borrowers. You did mention in the proposal that one of your main motivations behind the proposal is pretty much based on your yield farming and investment behavior. Can you explain a bit more about the motivation behind your, how you kind of invest and how you came about putting up this proposal for those who haven't actually gone through the governance proposal?
Sure. Yeah. I mean, I think you gave a pretty good synopsis, but pretty much like I think about my own behavior in money markets and just like earning yield on stablecoins. Not even just money markets, but using apps like BlockFi and a few others. Like, pretty much my primary incentive is the yield that it offers, of course. And I think like I've just never really needed the Omm incentives, which, I mean, that could be a coincidence, right? Like maybe we've had a good start where yields are always high enough to be interesting. But, from my perspective, like I just have never been lured into Omm as a lender by the OMM rewards. I've never needed to like click the toggle to say like view with Omm rewards and be like, oh man, I wouldn't have done it without clicking that toggle. But now that I see the Omm rewards, like I'm definitely going to lend. Like I'm pretty much trying to be objective, like not favoring Omm over other protocols just because it's on Icon and because, I know Dakey, but, more just genuinely there's good yields and I just didn't need the Omm incentive. So I said to myself, like, if I didn't need it, I imagine there's other people that are in a similar situation and trying to think about, spending like inflation of OMM tokens or inflation of BALN tokens. Like this is essentially a cost of the DAO by diluting all token holders in exchange for something, right? So I felt like it was kind of a wasted cost and could be better spent on, activities that directly generate revenue for Omm, which is people borrowing and paying interest. So, I mean, that was pretty much the basis of it, was just thinking about my own behavior. I was never incentivized to lend on Omm because of Omm tokens. I was incentivized because of the yield that it was offering. And it's always been high enough that I wouldn't feel like leaving and going elsewhere. And then, and then the revenue generating side of things, like trying to incentivize behaviors that directly generate revenue for the protocol.
But I guess
that was kind of the start of it.
But I guess that's the ideal scenario. Like you, ideally, a protocol would want people to join just for the pure functionality of lending and borrowing, rather than coming for the incentives. I guess that's pretty important.
Right. Well, that is true, but like I guess even more so, like just as much, you still want, if you are going to offer incentives, I think offering incentives on things that directly contribute to revenue is kind of where my head was at with the proposal.
Yeah. So yeah, essentially, what you're kind of saying is, from the proposal, what I gather is you're suggesting to obviously incentivize borrowing or lending, and as you said, since the revenue coming from borrowers is actually what pays for the lender's interest, that thereby, if obviously if borrowing is high enough, uh, when the borrowing APR is high, the supply APY is high. So
Right, exactly.
essentially saying is
Right.
by directing Omm rewards, you're kind of incentivizing them to borrow and kind of creating healthy APYs across the board.
Yeah, and kind of as you were talking there, I was thinking how you kind of incentivize lenders indirectly by incentivizing borrowers, because if there's a large amount of borrowers because they want the Omm rewards, then they're going to be paying a high interest, and then that high interest is what leads people to people like myself to deposit anyway. So it's kind of another thought there is that incentivizing borrowers indirectly incentivizes lenders too.
Yeah, I think that on a protocol in terms of increasing revenue for a protocol, I think that really helps and pushes that narrative. But in the forum discussion, obviously, and I noticed Arch and Stephen DS, which also kind of speaks about I guess a drawback of obviously on a protocol revenue level. Obviously, it helps, but in terms of a sell pressure to Omm, I just want to get. I know, Scott, you don't really have too much of an opinion on the tokenomics of Omm, but DK, maybe I can get you on in this. Obviously, sell pressure is going to be a concern because borrowers, I guess, are less incentivized to hold rather than suppliers of the Omm tokens. What do you think? Do you think this is actually a problem, or this will probably go away when there's more utility for the Omm token?
I think to the point that I think Steven and Ark brought up on the forum, I think those are fair points. I do think borrowers tend to actually sell Omm tokens more than lenders. I mean, just since Scott was kind of giving his own example, just give my own example. I mean, I'm parking my capital on Omm as well, but I haven't really sold any Omm tokens there. If I were borrowing some stable coins, I probably would be selling Omm tokens because, like, obviously the interest rate is pretty high. And right now, I think in general, like the interest rate on Omm is like pretty high. So I would imagine that a lot of the borrowers are actually selling Omm tokens to cover their high interest rates. So in a way, this is like basically like protocol paying out Omm tokens for collecting fees. And I don't know what the right balance is, to be honest. So I think that's why I think Scott, or I think it was TJ actually who proposed like kind of A/B testing.
Yeah.
And maybe like something good to kind of see, how many of these like borrowers are selling Omm tokens versus like compared to before. Is this like have like more negative price impact? Is this going to increase like the protocol fee? So there will be a few different things that will change. I think the primary things that will likely change is like potentially the amount of protocol fee and then the amount of the selling pressure from these borrowers. And it'd be good to compare those across like 3 different markets basically and see what makes sense as a community and decide.
Yeah, actually, that was sorry. Yeah, go on, Scott.
I was just gonna say, not to be boring, but I do agree with everything Davey said. So I'll just echo that as well. I do recognize like that. I mean, just objectively speaking, a borrower who has interest to pay is more likely to sell his incentives than someone who's earning interest and can afford to just speculate on Omm tokens and see what happens. Like they're still earning their yield, so it's just not that big a deal to just hold on to them and not sell them or stake them or use them to supply liquidity or some other purpose to kind of boost their yields. So I get both perspectives, and that is why I like kind of the 3-pronged approach of checking the effects against different pairs and trying to gather data and then make more informed decisions going forward.
Yeah, I think that was my next question in terms of what TJ and then DK soon after kind of added on to that in terms of which asset pairs kind of deploy more. I mean, the proportion of warm rewards too. So I guess I just want to get your thoughts in terms of just the understanding. I think TJ and also DK also kind of mentioned kind of moving less. Kind of I think DK mentioned in terms of like not giving any Omm rewards for supplying BNUSD as opposed to other options. Like, to the community, what is the thinking behind that, DK, so that as the community kind of understands why you propose that?
Well, it's basically to try 3 different testing. I'm sorry, maybe I don't understand your question. Are
He
you
was just asking like why you picked
Yeah.
BNUSD specifically.
BNUSD?
I feel like there probably wasn't logic there.
Yeah, no, because Scott is like this approach. So I mean, BNUSD he's involved with BALs. If that makes sense.
Okay. So I think, Scott, I think last time when you on the show, you kind of mentioned deploying, making value for money decisions in terms of deploying your governance token rewards. So I guess this is kind of in that similar kind of aspect to figure out where best to kind of maximize on revenue.
Sorry, can you repeat that?
Yeah, so I think last time when you were on the show, you spoke about deploying governance tokens for the best revenue-driven use cases for the assets. So I guess this is kind of moving to that concept where kind of
it would be for that pair and figuring out if it can generate more revenue that way and get more overall. I guess I don't want to say TVL because it's kind of a tough metric in a money market. Because it's like, but overall, just better performance, I guess, and see how it does. I guess what we would measure would be the fees generated.
Yeah. I think one of my like not issues, but one of my things that I would like to see, want to see how it's playing out, because the entire proposal is pretty much built on the premise that you're encouraging more borrowing through higher Omm rewards. Now, what if a scenario where majority of borrowers don't really value Omm rewards, like for you, for example, and as a result don't potentially get the higher revenue and the higher supply APYs. So obviously there's not much borrowing going on because of incentivizing higher rewards going to the borrowers. So the suppliers who usually would have got pretty healthy Omm rewards now get less or sometimes even nothing. In some cases, such as Barike. Do you think not using Omm rewards to incentivize borrowing and using a more kind of a different method would be better served?
Like what?
Like more sustainable, maybe like bringing, I guess, the usual approach of like more scarce assets or some assets from different. I guess when BTP goes live, I guess leave it as it is, and then when BTP goes live, there's more kind of assets where people can come on, and I guess there's incentive to borrow rather than actually going through a route of incentivizing borrowers through high Omm rewards.
Right. Yeah. No, I don't think like long term. I mean, you would want more reason to borrow than just Omm rewards. I mean, even short term, of course. I mean, I think the 2 primary drivers of borrowing on Omm. I mean, it could be wrong. I haven't looked at any block data to support this opinion, but I would say it's earning Omm rewards and then being a liquidity provider or taking advantage of mispricing on Balanced would be like the 2 primary reasons, and I do think that is a legitimate reason to borrow. So, or I guess, yeah, exactly. So, there is some legitimate reason to borrow, but the Omm rewards incentivize people to borrow more. I mean, like, what else would you want there's only two things that I guess there's three things that Omm rewards are used for. You can put them to liquidity providers or borrowers and lenders. I guess staking too. So maybe you guys would think that a better use of rewards would instead of be adjusting borrowing and lending, but going to staking perhaps. But yeah, I still think like what you want to think of in terms of incentives is driving revenue generating activities. Is just like a thesis that I kind of want to stick with.
Yeah, fair enough. I think yes, it'll be interesting how how it plays out because there's obviously there's potential that there may be not borrowers. Well, yes, it'll be interesting to see how it plays out. But obviously, given the current scenario, I guess you're more likely to get more borrowers to higher home rewards. I guess is what you're going at.
Yeah, that's what I'm thinking. Yeah, and then more things that you can do within the Icon ecosystem will also help. Like I think when Equality launches, you'll probably see a lot of borrowing from Omm in order to supply in Equality pools, which would because I assume Equality will have some sort of yield farming as well with their tokens. That'll probably be super high in the beginning, just like they always are. So there'll be like a ton of borrowing from Omm to participate in those pools, earn Equality tokens, and then they'll pay back their debt when their incentives aren't as attractive.
Okay, is there a potential? So this is what I've heard is pretty much kind of like the curve equivalent to Icon, I guess, Equality.
Right. Yeah. Exactly. Yeah.
Cool. DK, also, I want to kind of also get you on in this in terms of, in an ideal scenario, or I guess the aim, I guess, of Omm, would be to, get people in the protocol using Omm just for the pure functionality of borrowing and lending, as opposed to, you'd want Omm rewards not to be a factor and potentially not be given in the future. Something like RV and things that don't really give out rewards anymore. So is that down to adoption, or when do you think Omm can reach a level of where they just come for the lending and borrowing? Is it once BTB launches? What do you think?
Yeah, and I think a lot of people are kind of looking at prices, but personally, I think it's really just comes down to the utility of what people are using for Omm. Like Omm tokens is just icing on the top, in my opinion. And like what really Omm does is, provide more things that people can do, right? So like, for example, from my personal experience, like what I did was I used ICX as collateral and borrow stable coins and double down on ICX when the ICX price went down more than I think it should have, for example, right? And then obviously it kind of paid back when it went up, and then paid back stable coins and made a decent chunk. So it's like first, I think one way to use it is to use it as like leverage, basically, right? Previously, I think before Balance and Omm launch, there was no way to do it. Balance, you can do it with BNUSD, but obviously there's like this, the permanent fee, like the one-time fee that you have to pay. So if you're going to only borrow for a short, like basically do a bit of a more of a swing trade type of thing, where you're going to borrow for like a shorter period of time, I think borrowing on Omm makes sense. And, like in a volatile market, that's where you can either use it to, if you think the ICX price will go up, you can utilize your ICX to double down on buying more ICX. That's like why, what is it, Maker and Aave compound initially really took off, because, people who held Ethereum wanted to buy more Ethereum. And I've done that actually with Aave as well, personally. Like when I thought ETH probably was undervalued, I collateralized ETH, bought more stables and bought more ETH, basically. So I think there are fundamental utilities to these lending protocols. And I feel like a lot of people are just really, taken away by these like kind of yield farming opportunities. But in a sense, those are more of like icing on the top, really, in the end. Like you have to really look at what the core utilities are. So I think that's current core utilities for Omm, basically enabling ISIX holders to utilize their assets and making ISIX a productive asset, right?
Yeah.
Previously, that wasn't possible. I think going forward, I think there are probably a few more things that will make it more exciting. I think, if there are more places like Equality where you can utilize more of these stable coins for yield opportunities, I think, as Scott mentioned, there will be more interest to borrow stables. So that will likely increase the utility of the Omm as well. I think someone mentioned it in the chat, and then I responded that, like the reason why people borrow on, these lending protocols is actually not to make money. It's to actually borrow so that they can actually use it somewhere else where the yield is pretty high. If you look at off in compound, like if you're borrowing there, you're not definitely making not money there. So I think it's just got to be clear. I think people were a little bit, took away by the amount of Omm tokens they were getting, and that was just because it was early days. But like it isn't designed so that you make money when you're borrowing money. Like that doesn't make sense as a protocol typically. So I think that's just got to be clear. And then I think as more yield opportunities come either on ICX or ICE and whatnot, I think, the utility of Omm will go up. And then again, as mentioned on the chat, I think as BTP goes live, there are a few protocols that don't have money markets right now. And then with the BTP connections, these assets can be added, and hopefully we'll be able to enable these users to also use Omm to borrow stables and use it in various yield opportunities.
Yeah, I think you made an important point. I mean, for example, obviously, I like to kind of use the analogy of a bank and a money market protocol. Obviously, a bank is a pretty much an enabler. You borrow money to invest in other places in other areas. So I guess they're not going to give you shares in the bank just to come and invest or borrow money in a bank. They just want you to make money elsewhere, and that's the whole purpose of a bank per se. And then I guess a money protocol has a lot of similarities in that aspect. And
Yep.
so I think users kind of I think on Ethereum, as you said, Aave and stuff, they've really understood money market protocols, and they're really using it elsewhere, and especially in new protocols springing up and the yields. And also, I see a lot of them actually, going into Binance Smart Chain, and the yields are crazy there, Pancake Swap and things like that. So they're really deploying their assets not only on Ethereum, but also in Binance Smart Chain and things like that.
Yep.
But yeah, I just want to kind of like move on to the other proposal by Tada, I think. I don't know if I pronounced it right, but yeah, so it's about adding Omm and balance to the Omm protocol. Scott, what are your thoughts on that? Do you think it's a good move at this stage of the development of the two protocols?
Yeah, I think it's a good, an interesting move. I do see like there's potential risks, obviously, because there's less liquidity, right? I mean, both of them only trade on balance for the most part, but at the same time, that's really more of a risk that borrowers take. People who are using it as collateral, if they want to like really lever up against it and take that risk, that's up to them. So overall, I think it's a really interesting choice for the ecosystem, and should get more activity going on both apps. So I like the idea. I'm not as concerned about like the governance issues that some people brought up, especially with Balanced moving to the boosted balance token model. To really get governance weight, you have to lock for 4 years. So, and I don't think, I mean, overall, I like the idea. I think it adds use case. Like, I could just think for Omm, I would expect interest rates to steady out maybe around the staking yield for Omm, right? If you can borrow Omm tokens and then stake them and earn more yield by staking than you're paying in interest, then that'll be a trade. That's some net interest margin right there. You can do the same thing with balance tokens, borrow balance tokens, and then stake them and try and earn more yield from your staking than you pay on borrowing. So I think there's like clear use case outside of shorting, which is why like one of the initial pushbacks I saw on the discussion was that, why would we enable the shorting of these protocol assets when they're so new? But I also think there's other reasons to borrow them that make economic sense.
Yeah, I guess it's as you said with boosted balance and all that. I guess it's borrowing is less of a governance concern, as you said, in terms of no one really can really have enough governance power by just borrowing loads. And I guess BBAT doesn't really have a
that'll help, but I still don't. I'm still not like overly concerned about like malicious proposals from people who are borrowing on these protocols. I mean, like that's going to be an extremely costly attack, I would imagine, to actually be able to borrow enough tokens, stake them, submit a malicious proposal, unstake them, and pay it back. I mean, you're going to have like near 100% utilizations, I would imagine. And I still don't think you're going to pass the proposal. I mean, you need 67% approval on Balanced. I assume it's similar, if not identical, on Omm.
Yeah.
And I see that being a very costly failed attack for someone to push through a proposal to, let's say, like drain the DAO fund to their own accounts. I doubt that would pass, and they would just pay a ton of interest on Omm.
Yeah, I think even Sada, who kind of put the proposal up, I guess he kind of suggests, borrowing is an option on Balance, but I think he understands Omm obviously doesn't really have that mechanism yet, or even not as close to launching the mechanism with the boosted balance. So I guess
true, but yeah, I still don't think that's like a realistic fear. I mean, it is. Correct me if I'm wrong, but it's 67% approval to push through something on Omm, right?
Yes.
So if that's the case, like, do you really think someone can borrow 67% of the Omm token supply from the money market and stake them, lock them for 3 days, and get something passed without it being vetoed by the minority, like 33%? I think it's pretty unlikely.
True.
If not like nearly impossible. But the shorting side, perhaps. But at the same time, like if people start borrowing it and selling it, then I don't know. I'd have to think about the dynamic between staking rewards and people shorting, and if how that would work out. But
yeah, I think that sell pressure is also going to be a concern on that. DK, what are your thoughts on Omm specifically?
Yeah, I think this is a good proposal, and then I think this also, again, going back to what I was saying earlier, would make Omm also a productive asset. Like right now, it's earning staking reward just by staking, but in case anyone want to like play with leverage, now they can collateralize their Omm tokens and then borrow stables and either buy more Omm tokens if they think Omm tokens are undervalued, for example, or they may just buy ICX, etc., right? Or even Balance as well. So I think this creates more utility for Omm as an asset, and then making it a productive asset. Same for Balance as well. I mean, I primarily see it being used as collateral, similar to ICX. So
yeah, I think that's a good point. That'll hopefully that would outweigh like any short pressure. I would hope like the demand to use it for collateral.
Yeah, that's right. I think I agree with that. But I guess on the counter argument is using volatile, with this low market cap assets as collateral. I guess that brings another kind of liquidation risks and risk factors and things like that. I guess that's something that I think it need to be more conservative, I guess, on the thresholds and the LTV and things like that. I guess if that's managed, then the collateral aspect of volatility is not going to be a big concern. So, I think he mentions, it's to 25% LTV for Omm Balance, and liquidation threshold to be 32.5%. So, I think it's pretty good in terms of the overall structure of it. DK, is it? I know you mentioned in the forum discussion that obviously Aave has collateral options, but is that like a similar size protocol in Ethereum that kind of really, or any other any other network that kind of like allows their own governance token to kind of you can borrow or even do collateral on?
Yeah, I mean, I think I provide Aave as an example because it's like pretty well-known example, but I think Aave already had their own tokens in there before they even got this big, like when they were much smaller.
Okay.
And I think there are plenty of lending protocols that use their own governance tokens as collateral. Like I think, Cream is another one. I think Rari does that as well. So I'm not so concerned about that part specifically. I do agree that, the small market cap may lead to more manipulation. So it'll be up to the community to decide like whether that's like the risk we want to take for the growth of the protocol. But yeah, it's basically like balancing out, in my opinion, like the risk and the growth.
Yeah, I think that definitely really. Obviously there could be certain potential pitfalls, but I think overall, I think the protocol is, I guess, is strong enough to kind of have
And then I kind of saw like kind of BNU as a good example because like BNUSD right now, total circulating is like around 60 mil. So it's like on the lower cap side, but I think BNUSD has been added, but there hasn't been an issue so far over the past few weeks. So I think that does make make me, at least personally, a bit more comfortable with this kind of a lower market cap issue, basically.
Yeah, that actually goes to my next question. In terms of listing BNUSD, how has it gone in terms of, Scott? Did you one aspect is on the rebalancing, and also just what are your thoughts in terms of post launch, post listing of BNUSD?
I would say that the what was it? The deposits are less than expected, and the it hasn't necessarily fixed rebalancing. I don't really. Yeah, I mean, the more I think about it, the more rebalancing. There's like a lot of contributing factors that cause it. So I would say that it helped. I mean, I've seen BNUSD go above $1 temporarily here and there, which was like never happening before that. So now that there is a reason and a place to like stash your BNUSD when purchasing power is too low, I think it helps. So I mean, overall, I'm satisfied. I've used a lot of my BNUSD that's currently lent on Omm, and it does, I think, like provide an incentive for if we get the BNUSD yield higher consistently, if we can work something out where we can try and incentivize like higher yields on BNUSD, it creates a similar relationship with ICX and BNUSD as Luna and UST have, where you could buy it on exchange with USDT and then sell it on balance for BNUSD to get like a high yield on your stablecoins. I think we're like putting the building blocks together here, and it was an important step nonetheless, whether or not it eased the rebalancing pressures.
Yeah, do you think it would have been more effective had BNUSD been listed earlier, or do you think it still wouldn't have been more effective? I guess it would have helped on the on the deposit of BNUSD in Omm, but I guess, do you think that would have made a difference or not? Not really.
Yeah, I don't know how much of a difference that would make. I think like anyone who would have lent BNUSD earlier is still aware of the ability to do it now. The yields are pretty solid even without Omm rewards most of the time. Like it's been over 10% pretty regularly. That type of net interest margin where you can borrow on balanced for 75 basis points up front and then lend on Omm for 10+%. I mean, it's consistently higher, right? So you can create net interest margin while taking some risk in terms of being delevered on balanced through rebalancing. But besides that, the net interest margin is pretty solid there to borrow at less than 1% and then lend at higher than 10%.
Yeah, I think that's the play I'm making as well. I think initially when you suggested that, that's the first thing that came to my mind also in terms of
I do
deploying my
think there's
idea.
like an education aspect of like continuing to pump these ideas into the community in various different ways is definitely important to make sure people are aware of it and considering these different strategies.
Yeah, it's been pretty good in terms of, and also like rebalancing for me. I think I've done it like now. I mean, I've been borrowing, I guess, BNUSD right from the inception, and overall, I think I don't have stats to back it up, but it's just I don't know if it's psychologically skewed towards it working out, but I think it's really pretty much worked out in terms of where rebalancing, and I've really pretty much bought back. It's been pretty much net effect has been pretty positive. So just the manual
Right. Yeah. Same here.
transaction,
Yeah.
yeah. So I don't know if it's a coincidence or I know a lot of people kind of have.
I don't think it's a coincidence. I mean, it makes sense, right? Like the way rebalancing is triggered most often is like there's a market sell-off on a centralized exchange, and let's say ICX is trading at 250 unbalanced, and then it goes down to 225 on Binance. Then there's immediately rebalancing is going to occur to bring the DEX price back down to closer what the Binance price is. So what you're doing as a borrower is being able to sell before a dip and buy before a pump.
Yep.
As long as like traders don't get to it before rebalancing kicks in, then you're always getting a good deal. Like especially if there's like big dumps or big pumps and big dumps, you'll definitely that high aggressive volatility is going to help you in rebalancing. And not only that, I mean, now that I've tested the hedging strategy, I just make sure to have some SICX and BNUSD in that liquidity pool to counteract any effects of rebalancing. And there's really a lot of ways to manage it or not manage it and just be okay with the results. I think it's just like a psychological thing, a lack of messaging. Like I'm really excited. We're releasing a new landing page specifically for the BNUSD loan product that breaks it down and explains very clearly how it works and pitches the benefits in a much clearer way rather than the current landing page that is just like borrow cheap and doesn't really explain how it works and why you get to borrow cheap, and what caveats come with that. So, more clear messaging, more messaging within the app itself, all that's coming, and I think that's going to help a lot.
Yeah, I think that's really important. I guess it sends an important message also that your Binance is or Omm for that matter is not really a protocol that you put money and figure things out. We're like walk you through the process as well. I think that's the important message. I think.
Yeah, I mean, there's no such thing as sustainable free money. That just doesn't happen. So,
unless you're a bank.
Yeah, right, exactly. So yeah, well, I think just having the better messaging will help a lot. So in terms of like the user experience side of things and expectations, I also want to lower origination fees more over time. So that way it really does become like leverage for like next to nothing in exchange for maintaining stability of the stablecoin. It's kind of the deal there.
Okay, cool. That's cool. I think, and also I think the sheer manner. I think Omm also is now kind of a lot of proposals coming through. It's really, really good to see like community kind of coming through with foreign proposals, getting involved. I think pushing through. I think that shows it's a real locomotion and the whole community is getting behind the two protocols. I think that's an important thing to see, I guess.
Yeah. Agreed.
Just, I think I have to ask you. I think to end. I think both of you guys. I think ICE is obviously launching potentially within the next couple of weeks, I guess. Just need to ask you guys. How obviously it's definitely is a separate blockchain. We've seen protocols deploying on so many other blockchains. That's a model that people see these days. Do you guys see balanced on an Omm protocol on ICE? Is that a realistic transition to make, or addition to make to it?
I can take that one first. I mean, Right now, I don't have any specific plans of rewriting Balanced and Solidity. It's a pretty bespoke, unique product. It's not like it was forked from an existing Ethereum product that I can just copy and paste their code over to ICE. So it would be a lot of work to do that. And, I think I'm kind of happy, having Icon as my home, if you will, and, trying to leverage BTP and seeing how that works out, patient, waiting for API documentation and how we can get creative there. And if BTP works out the way that I hope it does, then, I don't really see the need to move. I think it makes sense if you're a new app to build on ICE potentially. But to rewrite your app and migrate your users to ICE, I think it's pretty marginal benefits. Most of the benefits for ICE are on the initial development of the product. Good. In my opinion, using EVM and Solidity, most of the benefits come prior to product launch.
DK, what are your thoughts? Do you see Omm pretty much?
Yeah, I mean, kind of boring, but I think in that largely agreement with Scott over there.
Yeah, I think the community. I think I've seen on the Icon Discord channel. I think everyone's excited for ICE, but majority of them don't really know what, because obviously there's information yet to come. So I guess everyone's kind of seeing what kind of options ICE comes up with. So yeah, I think it'd be really interesting to see. I think there are a few dApps already kind of testing, although I think they're pretty much ready to go. I think I don't know if my statement is correct, but I think.
Yeah, I don't know, honestly. I'm not on the ICE team, but I am excited. One of the things that excites me about ICE is the fact that there's all these other teams now that have a strong incentive to make the Icon ecosystem successful outside of Icon, the Icon Foundation, ICX Station, the existing groups. We have these new groups that are focused on the ICE blockchain, which does add value to the Icon ecosystem. I think of ICE as the EVM layer for the Icon ecosystem. And, I'm sure they're going to work on some interesting economics for ICE to make it sustainable and also beneficial to ICX. So, I'm excited for the new teams that are entering the ecosystem and the new doors that it opens just in general.
Yeah, and also, I mean, obviously, I don't want to speak too much about ICE and things that, and also the airdrop, but I think having seen the pandemonium that the OMG airdrop caused, I think a lot of the exchanges didn't really know how to play the DAC. A lot of people are borrowing. Some exchanges had different practices, but I think Omm, for a good example, I guess we kind of knew dynamics already in terms of preparation and things like that. I think the OMG.
That could be what's causing rebalancing too, for all I know. I don't even think about, there's definitely a lot of excitement about the ICE airdrop within the community. So I think you're right there.
Yeah, I think that probably is a reason. I think it's a shame also because I think probably a reason why I think the balance and Omm is kind of price is a bit subdued. I think it's short term, maybe potentially people trying to take advantage of the airdrop, I guess.
I also think that's true. I mean, strictly just based on just anecdotal chats and stuff that I've seen, in the chat rooms, people talking about it, of selling their balance tokens to into ICX to maximize their ICE airdrop. People not wanting to borrow on balance. They don't. I think that causes a lot of the stress about rebalancing because of this upcoming airdrop. So I'm definitely looking forward to this snapshot whenever it comes, and just return to normalcy without these weird economics that are occurring.
Yeah, I think Omm has borne the brunt of it for some time. So hopefully, once the snapshot, date has been released and the snapshot date has passed, I guess it's back to normal, I think. And I think, guys, thank you very much for your time. DK, Scott, always a pleasure.
Yes, sorry, I have one more question for Scott, actually. But I guess, there are now more yield opportunities for BNUSD on Omm, and then also with like these new stablecoin pools. But I haven't really seen an increase in the minting amount of BNUSD since these like new yield opportunities have come up. Do you have an idea why hasn't really impacted the amount of BNUSD being minted?
So I think that chart is a little misleading because the chart, like when rebalancing occurs, it burns BNUSD to lower the supply. So I'm going to check the stats real quick. I'm in front of my computer. You can see in the performance details like what the new mint is based on the loan fees that were generated. So like in the last day, let me just
I'm just looking at
do
the
some
graph.
quick calculations. Yeah, so looking at that graph, like that graph is going to be pretty flat as rebalancing occurs because rebalancing burns BNUSD from the liquidity pool. But if you scroll down to performance details and then look at the earnings section, you can see that what is it? The numbers aren't up, so that's one thing to point out. But you can see that there are still a lot of originations occurring. It's not like the originations are going down. The loan fees are up maybe like 30% week over week, something like that. If you click past week, it's like
is loan fees like fees?
Yeah, they're up 35%.
Or
yeah, so 75 basis points. So that's 75. That number you see, like if you click week over week, it says like for this current week there was 19,670 BNUSD in loan fees. That is 75 basis points of new originations. So if you divide that by 0.075, that's how much BNUSD was minted this past week.
Well, interesting. So there is actually a decent amount of being minted.
Right, it keeps getting minted and then burned. Essentially, is what keeps happening because rebalancing is burning the supply based on ICX price on other venues. So when ICX price drops on other venues, it's going to burn BNUSD from the SICX BNUSD pool, essentially. And that also affects our collateral numbers. So when you see collateral going down, that's because collateral is pulled from the collateral pool and put into the SICX BNUSD pool, which replaces the burned BNUSD to correct the price.
I see. Got it. Okay.
Yep.
Cool.
Yeah. Good question though, for sure.
Because I would imagine that if the yield opportunities are more yield opportunities, it would make BNUSD attractive and it would increase the amount of BNUSD being minted, just logically speaking.
Yeah.
So
I do think like what's happening is, as Arosh said, with like the ICR drop, that most people mint BNUSD and buy ICX, which creates kind of like this circle of like minting and burning BNUSD over and over. As more people mint and buy ICX, more of it is burned through the rebalancing mechanism. But I do think a lot of people are trying to just lever up and buy ICX to maximize their airdrop, and hopefully we'll see more. We'll have like data that makes more sense after the ICR drop, or like at least take that factor out so we can do more analysis.
Right.
Yeah, that'd be cool. Also, just on DK's part, I think on terms of minting BNUSD, what would the CPS proposal like have? I know I've noticed the CPS proposal is going to have it's going to be in BNUSD, right, as opposed to ICX. Would that have kind of
right? Yeah, I am excited about that. I mean, that's going to start. That'll start counteracting rebalancing in some sense, depending on how much BNUSD is acquired, because the CPS is going to be selling ICX on the exchange and buying BNUSD. So, that will start impacting the supply as well, where less of it would get burned.
That'd be awesome. That's pretty cool.
Yeah. Pretty much like if you can think of like the Luna UST example, like if there was about to be like a massive airdrop on Luna, maybe a lot of people would be burning UST for Luna. Is kind of what you see happening on Balanced, is people burning BNUSD and trying to get as much ICX as they can.
Yep. Yep. Does anyone have any questions? We can wrap up if doesn't seem like. All right, brilliant. So I guess thanks again, Scott and DK. I guess we'll probably, the next exciting news and the ice details coming through. Exciting times, and hopefully the bull market continues and there's more excitement and there's more euphoria to kind of drive the markets forward.
Agreed. I don't think anyone would disagree with that.
All right, take care, guys.
All right.
Yeah.
Thanks.
Take it easy.
Take care. Thanks.